Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. People make the mistake of thinking they need to come up with $63,000 to buy a whole Bitcoin. They don't have to buy a latte every day, they can buy a Satoshi instead. Also, if Bitcoin network value runs out and Bitcoin is, well, let's use Uran's number, but let's say Bitcoin is 1 million. Right, so it goes up by 20 times from here. If you have Bitcoin for a long time, you won't care about inflation. That's what matters, since all that's happening is the dollar getting weaker. It's not. That's really what they're going through. Natalie Brunell just got off the phone with Tom Lee, a famous financial analyst and Wall Street planner. Lee talked about his positive view of Bitcoin, the difference in wealth, and how Bitcoin could help solve many financial issues during the conversation. According to Tom Lee, prices are affected by more than just basics in the short term. That means it's easier to trust a Bitcoin price prediction for the long term than for the short term. He said that Sean Farrell, the head of digital strategy at his company, had set a price target of $150,000 for Bitcoin by the end of the year by using both price-to-book and stock-to-flow methods. Lee talked about how Bitcoin has become a real asset class with the help of big companies like BlackRock. Instead of putting everything they had into Bitcoin, he told buyers to put just a small amount of their money into it, -2% to 5% at most. He used the example of his company's plan to spend 1% to 2% in cryptocurrency, which has paid off handsomely for their clients, to show that even a small amount of money can make a big difference. Tom Lee also talked about how Bitcoin could become an affordable way to bank, especially for people who don't live in the US or in poor places. He thinks that Bitcoin's value might be higher than that of above-ground gold, which is worth $16 trillion right now. This is because Bitcoin is more resilient and can be used as a hedge against countries and disasters. You can watch parts of the interview to learn more about what Tom Lee and Natalie Brunell talked about. If you want to see more videos like this one, please like it, subscribe to the channel, and turn on post alerts. Have fun with the movie. One thing I'd like to say is that I believe it's easier to be sure of a longer-term price than a shorter-term one. Because facts aren't the only things that affect the price of something on the market in the short term. As an example, what's been going on in Germany? And with MT. Gox lately is making short-term headwinds and might even break technical trends. It doesn't change where Bitcoin will be in 5 years though. But the price goal of $150,000 comes from work done by Sean Farrell, who is our head of digital strategy. It looks like he's looking at a mix of what looks like a stock-to-flow model and an important, like a price-to-book model. How much does it cost to make Bitcoin? How much does that break even mean? And what kind of number should you give that? And the three numbers add up to about $150,000 by the end of the year. I also think that's pretty doable. In fact, it's mostly only likely to happen if the SP can keep going up until the end of the year, which is our base case. Also, someone wants to know why they should care about Bitcoin. Let's say that some people are listening and are interested, but they're not sure if they should buy any. In fact, I believe that question has been answered for a long time now, that Bitcoin is a real asset class. It's backed by BlackRock, which is the world's biggest asset manager. It was just after earnings today that Larry Fink talked about how important Bitcoin is to BlackRock's future, which is something they want their clients to do. This is what I think people who are interested in Bitcoin might do wrong. They might think they have to put all of their money into it. They only need to put in 5% or 2%. This is the same amount of interest someone would earn on their savings account for a year. They only need to set aside time for crypto. When we first wrote about Bitcoin, we told them to put 1% to 2%. That suggestion would make up 80% of their portfolio today if they didn't adjust it. For our customers, it's been a huge success. A lot of people have told us that putting 2% of their money into crypto, which they saw as a low-risk bet, has really changed their lives. That's how I think people should see it now, since Bitcoin isn't reaching its peak. It hasn't really caught on with many people yet. There are still a lot of doubters out there, and a lot of banks are blocking their customers from accessing market versions of Bitcoin. So the ETF isn't even okay with many companies right now. And that tells me there are still a lot of people who want to hold crypto. How far can Bitcoin go? Okay, it seems like the very least that Bitcoin should aim for is for its value to be higher than the value of gold that is currently in the ground. Only then should people rethink whether Bitcoin is at its peak. 16 trillion is the number. And I think that's a good standard because gold can be used in some industries and in jewelry. The main reason it's worth 16 trillion though is, it is seen as a unique way to protect against currencies and disasters. And I think Bitcoin is much more reliable and useful if we ever need to start using gold. You should not try to take $1 million worth of gold by yourself. I need a couple of friends to help me. It is possible to carry 1 million bitcoins on a wallet. When talking about Bitcoin's long-term chances, Tom Lee said that the price should reach $150,000 by the end of the year. To get investors to put a small amount of money into Bitcoin, he talked about how strong it was and how it could grow into a cheap banking system. Tom Lee says that Bitcoin blurs the line between money and doing good for others. He said that people who hold and use Bitcoin get paid, while investors in traditional finance get paid when a company does well. Lee says this makes it hard to tell the difference between rent-seeking, capital, fairness, rewards, and loyalty. Lee also said that Bitcoin is changing the way people think about money in the same way that flight miles are seen as money but not as real money. Lee said the economy is doing well even though the Fed is raising interest rates quickly to fight inflation. He said that recessions don't usually happen when people in the market are expecting them to. Most institutional buyers agree that one is coming soon. Lee thought that this would show that recessions are less likely because people are expecting them. Lee agreed that signs of an economy that is weakening include falling excess funds, a worsening job market, and problems in the housing market. He did think, though, that they might change their minds if the Fed starts to lower rates because they are rate sensitive. Lee also said that the credit or bond markets don't show any signs of a slowdown, and the stock market doesn't show any signs of weakness. So he told them not to use economic speculation as a way to make money when they were investing. To learn more from Tom Lee, let's watch more clips from the talk. I believe Bitcoin is making it hard to say what money really is. I mean, it's already hard to say what it means for a community to gain from holding something. Because in a normal banking system, let's say you have Amazon users. They helped Amazon grow and become one of the biggest companies in the world today. Really, it's the customers and how loyal the buyers and sellers are to each other. However, the shareholders, the people who gave Amazon the money, are the only ones who really gained from that. That is, it didn't add value to the group. Bitcoin is so different, right? This is because Bitcoin is good for people who hold it and use it. That's why I think it's really confusing what an asset is. It mixes up ideas like loyalty and rewards with equity, cash, and rent seeking. To me, the idea that it's also making money less clear makes sense. I know this is too simple, but airplane miles are money. We just don't think of them that way. In fact, there is a plan in Congress that could get rid of interchange fees that credit card companies can charge. This would make all of these hundreds of billions of dollars worth of airline points, which many people think of as money, worthless. It makes sense to me why some people are negative. Was going to give the economy a heart attack by raising rates at the fastest rate ever to stop inflation. How the economy did wasn't important to him. But it's been more than a year since the last rate hike and things are quite good in the market. That means the chance of a slump has passed. As you may or may not believe, I've been watching markets for almost 30 years. So I've been through and written about a lot of recessions. When all the markets say a recession is coming, it doesn't happen very often. People who trade on markets aren't very smart. So a lot of people think a recession is coming soon, and we see it. I mean, we meet with big investors all the time who think a recession is the most likely outcome. So that would just mean that everyone is the business can't be predicted by anyone. We don't try to guess what will happen with the economy, but the only reason we